India saw an unprecedented surge in venture capital investments over the last few years, with 2021 leading the record-breaking funding rounds. However, the ongoing Russia-Ukraine war, interest rate hikes, and recession fears led to a funding crunch as investors turned cautious on spending. Indian startups raised a total of $18 billion in venture capital funding in the first half of this calendar year, according to data from Venture Intelligence. Even though the amount raised is higher than the corresponding period last year, there is a clear slowdown on a quarter-on-quarter basis. In the second quarter of 2022, VC investments in startups stood at $6.9 billion, down nearly 60% from $11 billion in the first quarter, Venture Intelligence data shows. The mega deals, that is, investments over $100 million, were also down on both year-on-year and sequential basis. Interestingly, even as late and growth stage startup funding dried up, early stage funding proved to be resilient. Early stage startups raised $856 million in the first quarter of this year, while second quarter funding stood firm at $839 million. When it came to late stage startup funding rounds, the second quarter funding nearly halved to just $1.7 billion compared with $3.3 billion in the first quarter of 2022. With capital flow expected to be muted in the months to come, Indian startups have tightened their belts and resorted to layoffs. According to the Inc42 layoff tracker, over 11,000 employees were fired in the first 6 months of this year. Even as edtech firms face the heat for the sheer scale and number of layoffs, several unicorn startups like Ola, Blinkit, Vedantu, Cars24 were part of the firing list as well.
When a young founder is given so much capital, you would have to burn that money to be able to raise the next round. And there are two primary verticals where you can spend your money. One is marketing, the other one is manpower. The reason why you can't spend way too much on marketing is because if you did spend hundreds and thousands of crores and you did not get the revenues, then you would not have product market fit. Like, you would quickly realize that what you're building is pointless. So it's way easier to hire as many people as you can and then burn that whatever that capital is. We've overhired for absolutely no reason. I don't think startups require more than 100 people to be able to build a fairly large business to support about 10 million users. Again, I don't see the need for hundreds and thousands of employees, especially the from some of these colleges that people prefer to hire from.
I think you have to stick to your core, stick to what you wanted to do as a company, what are the problems that you're trying to solve. And I think whatever is needed to spend for that, and that would help you grow as a business or create a product or a customer service that would be successful, is always solving for core business problems. So I don't think whether these are good times or bad times. Good companies always get funded. Right milestones and right business successes will always get funded, right from consumer engagement to orders to adoption of your product, consciousness about is this right spend, and also I think choosing between vanity spends, like something that makes me look good versus something that really delivers for the business. And I think that's what would happen going forward. All companies were not on insane valuations. Yeah. Therefore, it will remain company to company. It will remain between what investors are bullish about, which companies are reaching the right milestones.
Meanwhile, VC funds and tech investors are urging startups to focus on durable growth and profitability. Sequoia Capital recently made a presentation to its portfolio companies, stressing on generating sustainable cash flows, consistent growth, and disciplined financial management. Another investment firm, Y Combinator, had also sent advisory notes to the founders of its portfolio firms on how to navigate through the current crisis. Abel Joseph, founder and CEO of dating apps maker Aisle, which was recently acquired by InfoEdge, says founders should particularly focus on employee morale as startups downsize their workforce and freeze hiring plans. Nevertheless, startups will have to turn conscious about their marketing spends and hiring practices and learn to live with greater scrutiny. Will the need for being circumspect take the sheen of India's startup story or only enhance it going forward?
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
यार मत पूछ यार फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.